Hello. This is Jonathan, and you're listening to the Johnny Talks podcast, the place where we help you achieve your financial goals. Hola amigos, hope you're having a great day wherever you are. And if you're a new listener to the show, special warm welcome to you. I really appreciate you tuning into the show. And if you're a returning listener, welcome back. I appreciate it even more. And first of all, I want to wish you a very happy and most of all, a very healthy New Year 2022. I hope you had a great start and that you haven't given up on your goals yet, huh? And with that said, let's move on to today's episode. So for today's episode, we will speak to my friend Yoran, the co-founder of Curvo.eu, a Belgian investing platform. While there's a lot of information out there on investing in general, ETFs, brokers, individual stocks, it takes a lot of effort and commitment to get started if you're new to investing. And just imagine you live in an amazingly complex and surrealistic country like Belgium, and things get even more tricky. These are some of the issues we will talk about with Yoran. He actually struggled himself a lot to compile the information and to find his way when he first wanted to create a better future for himself by investing in the stock market. We will go through both his personal journey and the Curvo journey so far. So this episode is for you if you're convinced investing in the stock markets is the way to go for making the most out of your savings, but maybe you're still stuck due to the overwhelm of information and the possibilities. The episode will be particularly well suited for millennials and Belgians, as we will also talk about branch 21, 23, and how they compare to investing in a simple ETF, for example. So, without further ado, let's hear the interview. Hello, Yoran. How are you doing today?
Good. How are you?
Yes, I'm fine. It's soon Christmas here, so I'm excited to take a break, actually.
Yeah, same here. It's been pretty busy.
Very good. Yes, and you've been busy, I think mainly because your your investing platform Curvo has been launched in October 2021. Is that correct?
Yeah, that is correct. Yeah, after 2.5 years of hard work.
Okay, that's good to hear. So can you tell us, we will go more in details at the end of the show, but can you tell us a little bit about Curvo? What is it in a nutshell?
Sure. So Curvo is the easiest way to start passively investing in Belgium. Mm-hmm. So it's an investment app, and it aims to solve all the complexities related to passive investing for Belgian millennials specifically.
Okay, so that sounds exciting. So what I was interested into understanding, Yoran, with you, is your journey actually to investing. How you started, why you started investing, and then we will move slowly to let's say the birth or the creation of the Curvo app. So why did you start investing in the first place, and how did you start actually?
Yeah, so I started investing about 4 years ago. So not that long ago.
Okay.
And the reason why is because I think, just like many people, like recently, is I was looking every year at my bank account, all my savings on my savings account, and I saw the interest was almost zero, and at the same time, like I understood that inflation was eating away at my savings every year. So I wanted a solution, and I was also getting a bit worried about my pension. It kind of started to itch a little bit because I've always been an entrepreneur. Right after my studies, I never had like a job as an employee. Mm-hmm. And so I knew that, if you're a freelancer or an entrepreneur, like your pension is a lot more or less. The state is going to help you a lot less than if you're an employee or a civil servant. And so I started looking into the financials of the pension system that we have in Belgium, and it just didn't look that great. So I kind of wanted to take matters into my own hands. And from that point on, I started reading a lot. So I picked up some books, kind of the classic, let's say, in personal finance. A lot of it's, very US centric, of course, but at least it taught me the fundamentals, like all the different types of investments you can do. And I came to the conclusion that index investing would be the best way of investing for me. And so that's how I started.
Okay. Can I ask how old you are, Yoran? You're not a woman, so I can ask it.
Sure, yeah, of course. I'm 32.
32. So isn't that young to think about pension and retirement? I mean, it's so so far away.
Yeah, it is. But at the same time, like, I didn't want to be in a position where, I'm 50 and then it may be too late. So I wanted to at least be prepared for, for my future, let's say, for my long-term future.
Yeah, very good. You went through the literature, you read a lot, and then you concluded that, okay, ETFs are the best way to prepare for that retirement, to secure a financial future. So why is ETF the one of the best options? I mean, there's people investing in individual stocks, there's real estate, there's crypto. So maybe 4 years ago, 4 years ago, it was already quite a hype, especially 4 years ago in December 2017. But so why did you choose ETFs actually?
Well, first of all, real estate, for instance, is a potential alternative. But then I didn't have that much money to put down as a deposit. I also didn't want to invest in a house where I knew I wanted to maintain my freedom to be able to move, different places, different countries. Crypto, funny story, actually, in 2012, I was the owner of 110 Bitcoins.
Oh my God.
I was quite early with it. Unfortunately, I still own some of it, but I sold most of it during all the different peaks and downturns that have happened since 2012. So, so I mean, at that time, I was a bit disillusioned with the crypto idea. Individual stocks, I tried it and I had burned myself with it, not with a lot of money, but I just realized okay, if I want to do this really well, I need to spend a lot of time, reading quarterly reports of companies and so on. I just didn't want to spend my time doing that. And even then, the more I read into it, the more I saw that even if you do all that stuff, the active management, you do it well, the odds are still against you anyway. So that's why, in the end, ETF investing is relatively low barrier to entry. With a little bit of money you can get started. The fees are okay. There's a whole history super long track record of proven results and, investing in traditional financial markets of stocks, equities, and bonds. So yeah, all this together made it that for me, that was the best way.
Yes, of course, I see it. And then maybe just for the listeners, and you never know, sometimes there's first-time listeners, an ETF, can you give a definition and maybe make a difference with index fund? Is that different, Yoran?
No, so that is the same. An index fund is pretty much the same as an ETF. The only difference is the legal wrapping of it. So an ETF stands for exchange traded fund. So it's basically an index fund that's traded on the stock exchange. So instead of going directly to a fund provider, let's say Vanguard or iShares, that's if you buy an index fund, you go directly to the fund provider. If you buy an ETF, you buy it on the stock exchange from another trader. But in practical means, it doesn't really change much. And the basic idea behind it is that instead of you basically buy the whole market. Index fund is a way to buy the entire market. So when you make an investment, you make a bet. You make a bet that the value of the thing that you're investing in is going to rise in the future. With index investing, the bet, I think, is very simple, is you bet on the continued growth of the global economy on average.
Yeah.
You look at the history of the last, since basically the Industrial Revolution, us as a society, we've become more and more productive year on year. We've continued to innovate year on year. And on average, our productivity made that we just create more and more value per hour every year. And so bet in index fund is basically a bet on us, continuing to innovate as a society.
Mm-hmm. And Yoran, we always say that past performance doesn't guarantee future performance in the world of investing. So I think you made good points, but is that a guarantee for the future? Because the economy right now, with the pandemic, with the inflation, with the supply chain issues that we are facing, does it still make sense to invest in a global index fund?
Yeah, I mean, of course, yeah, past performance guarantee, and something bad can happen, of course. But I think that, the problems we're seeing right now, for me, they're like, short-term issues, and we will overcome them. I'm really an optimist in that sense that, whenever us as humans, we're confronted with a problem, in the end, we, manage to find a solution. And, when you look at even recent history in the 20th century, we've had massive crises, 2 world wars, which are much, much worse than, the coronavirus that we're seeing right now. And we've managed to overcome those as well. So, I'm very optimistic in that sense.
Okay, very good. And you're 32, so, when you'll be 65, 70, I don't know, but it should be, you still have time to how can I say, withstand a crash or two.
Yeah, exactly. Yeah, that's the, point of having a long investment horizon.
Mm-hmm. And then one question I have on ETFs, because, if you listen or read the American literature, like The Simple Path to Wealth, which I believe you have read as well, and all the FIRE blogs, which are in English, but mostly from the US. I mean, most of them, they advocate to invest in index funds and in the S&P 500. Some also advise to have a total market fund. But what would you say is the best here? Because as well, maybe there are some excellent European ETFs, or what should we do here?
Yeah, so first of all, as Europeans, from tax point of view, it makes most sense to invest in ETFs that are offered by European, fund providers.
Yes.
But that doesn't mean that those funds themselves cannot invest in the whole world. I personally invest as diversified as possible. I know some people say, I want to invest just in the US because, the S&P 500 has outperformed the total stock market like the last 40 years. But again, there as well, like past performance does not, does not guarantee future performance. And I think the performance of the American stock market the last 40 years has been pretty exceptional. And there's no reason that the next 40 years is going to be the same. And so I really believe in globally diversified portfolio, and like diversify as much as possible. So that includes, US, Europe, like developed nations, but also emerging nations like Brazil, Taiwan, and India and China. And that is perfectly possible with funds that are available to us in Europe.
So basically, if I understand correctly, we should look for a world ETF. If that fits with our strategy, of course, and we have done our research, but we should look for such a fund provided by a European fund provider, basically.
Yes. Or like the big ones in Europe, Vanguard, iShares, those are American companies, but they have legal entities in Europe.
Mm-hmm.
And so when you look for those funds, you can tell by so every fund is uniquely identified with an ISIN code. It's like a international standard. And the first 2 letters of the ISIN code indicates where the fund is registered, where it's domiciled. And so if you see, for instance, in US, so with US, and it's an American fund, and for us from Europe, that's from tax point of view, it's not very advantageous. And so mostly the funds are located in Ireland and Luxembourg.
Yeah.
So you would look for IE and LU.
Yes, because I think this is also a big advice for Belgians. I think there's quite some Belgians listening. It's to look for the Irish domiciled funds due to the tax regulations, which is more advantageous than the US fund, because then they don't pay. I think there's a 0% if the fund is domiciled in Ireland or something.
Yeah, Ireland has a special tax treaty with the US,
mm-hmm.
which makes that you don't pay, like funds registered there don't pay withholding tax on the dividends.
Yeah.
And Luxembourg has a similar structure. That's why the funds themselves are located there.
Indeed. And talking about taxation, one important thing, depending on, of course, each and everyone's strategy, there are some funds because you mentioned dividends, there are some funds, global funds, that distribute a dividend and some not. Which one should we look at, Yoran?
Yes, indeed. So those are the 2 types are distributing funds and accumulating funds. And the difference indeed is that when you have a distributing fund, then you as an investor perceive the dividends, once a quarter. And the issue there in Belgium is that those dividends are taxed as 30%. And so you basically lose, 30% of your dividend income to the Belgian taxman.
Mm-hmm.
Accumulating funds are a way around that. So with an accumulating fund, the dividends actually stay within the fund and they are directly reinvested in the fund. And so you still get the benefits of the reinvested dividends, but you don't have to pay any tax on that.
Okay, so that's quite important. So if this is part of your strategy, look for the accumulative fund. Huh? Definitely.
Yeah, 100%.
Yeah. Okay, very good. And then, of course, you obviously look now at ETF, world ETF yourself, but so you don't have any other type of investment to complement that, or you really only 100% ETFs?
No, so I do have some crypto now.
Yeah, okay.
Yeah, I do invest in some. I have a small part of my portfolio in crypto.
Okay. That sounds good. And any particular advice or tips there on crypto, or why did you jump back into it?
Yeah, so the reason I initially got into Bitcoin quite early on was because I really believed in Bitcoin as a future currency.
Mm-hmm.
I had read the famous white paper, and I was just blown away. Like someone had created this, had perfectly married economics with crypto, with mathematics, with computer science, and created this, this beautiful system that's the Bitcoin system, and still standing nowadays unhacked, which is incredibly impressive. But so I really believe okay, this really could be a future of a future currency that completely bypasses all the traditional systems. And I thought, especially for international transfers, this could be, very useful when you think about, for instance, there's a lot of, migrant workers who, work in the EU or in the US and who, still send money back to their home country, to their family. Now they just lose out so much money on just, using Western Union on the fees and so on. And like that, for me, that was just one obvious application of Bitcoin. And so as years passed, this didn't come true. As we know now, Bitcoin is just inherently deflationary, which means that holding it or spending it as a currency just doesn't make any sense because its value just keeps increasing.
Exactly. Yeah.
And so I just became a bit disillusioned. I was like, okay, this is, for me, that was the reason why it was so attractive. And now it's just become digital gold. But then, after a few years, you had different, the idea of blockchain kind of took hold. And, you saw things like Ethereum coming up and all the different applications which use the blockchain just beyond its financial use case, but really, use as basically a large decentralized distributed database.
Mm-hmm.
And I saw some, definitely some potential. So that's why, I started reading up on it a little more and said, okay, this is a bet I'm willing to take to, allocate a small percentage of my portfolio to this thing that is obviously growing very fast. I still think it has so much to prove. And I still see a non-zero probability of the value of the industry as a whole to go down. But yeah, so that's what it's basically a bet I wanted to make. Because
yeah, sure.
What if those people are right?
Yeah,
then,
exactly. Yeah, so high risk, high return, and yeah, why not take a small part of your portfolio and bet on it? Actually, yeah, why not?
Exactly.
I mean, I have a little bit as well. So not too much neither, but okay, I put a bit every month. Okay, let's see how it goes. It doesn't change my life, so it's not life-changing amounts, but if it explodes, who knows?
Yeah, exactly. And it's funny that I invest in the same way as I would do traditional investment, in the sense that I apply the passive investment principles to it.
Mm-hmm.
So I created my own top 10 cryptos, and then weighted by market cap. And so it has an allocation, and every month, I calculate, okay, the allocation is this much. So then I invest according to that allocation. So I basically I invested an index fund for cryptos.
Yeah. Okay, that's good. And then one thing before I'm looking at Curvo is it's very Belgian. So my apologies to the international listeners, but I think it's quite important and quite helpful to understand. For the Belgian listeners, in Belgium, with regards to pensioensparen, I was going to say, but to saving for retirement, we have two tools. that the government has put at our disposition. That is the branch 21 and branch 23. So these are two ways to save for retirement. And then there's quite some tax advantage to it. But then I was wondering if investing in an ETF is better than to put some of your hard-earned money into one of those, let's say, investment vehicles. So what is your take on that, Yoran?
I did a simulation 2 years ago because I was very curious about the answer to this question myself. And so I simulated 3 scenarios. One where you save in Tak 21 or branche 21, branch 21 funds. The second where you invest in a branch 23 funds. And the third where you passively invest in a portfolio. I think it was a 50-50 like equity bond portfolio. So fairly traditional. And I tried to take a very complete picture. So I took into account the transaction taxes that you have. I took into account the fiscal advantage that you have with the government subsidized way of saving. I took into account the 8% tax you have to pay at the end when you turn 60, and to get a really kind of accurate picture. And then first thing that I ruled out was the branch 21. The problem is that the returns are so low that very quickly you're better off either doing branch 23 or passive investing, because it's so the money is kind of like a slightly better savings account that follows inflation, or maybe not even. So it's really bad. And like the problem with branch or like pension saving, the Belgian pension saving system, is that you cannot touch the money until you're 60, unless you pay a big penalty. And so that by default you're looking at a very long investment horizon if you're 30 or 40, whatever. And so that's why the branch 21 doesn't make much sense for anyone who is not like in their 50s, let's say. And then branch 23, it's harder because those are in branch 23, your money is actually invested in funds. So the money is invested in bonds and stocks, and like there's tons of large banks, also insurance companies that sell different funds. They'll have like different risk profiles. So you have defensive funds, invest more in bonds, and also more offensive funds that invest more in stocks. There are some regulations into how your money can be invested. So the state says, for instance, it puts constraints of how much can be invested in non-European stocks and so on. And so I took I took a pension saving plan fund that I had invested in from Belgium, which was an offensive one. And so I looked at its historical performance, and I compared it with investing in ETFs. And I came to the conclusion that the ETFs was more attractive after 15 years.
Okay. So it gave you this, usual return that we usually see is that between 7-8% after inflation, or the ETF, huh?
Yes, exactly. And so up until 15 years, the fiscal advantage actually is more important than the high return that you would get passive investing, and then the lower fees you pay. But then after 15 years, like that kind of takes over, and from then on, the exponential growth of the higher return just makes it that you're better off passively investing from that point on.
Okay, but then does it make sense then to even maybe invest in both, like to have this branch 21 or TAC or branche 21 or 23 in addition to ETF investing? Or do you say, look, just go for a world ETF and just chill and just think about that, and you will be better off then?
Yeah, it's the difference is not that big. And some people just feel like you can see, like in all discussions when we posted this as well, like on the various communities, that for many people there's like a sense of safety.
Yeah, exactly.
If they do it in the branch 23, they're like, oh, I like to fill that up before I do anything else. And like that's perfectly fine. I think as long as you don't invest in branch 21, but you do it in the branch 23 funds, I think that's perfectly fine.
Yeah. And then of course now I'm interested because you have quite a short number of years of investing. and then you already developed your app. So what was the journey there on creating Curvo? I mean, what was the thinking? Why Curvo? And then, how did you manage to create Curvo?
Sure. So if we go back to 2017 when I had read all those books, they were mostly American literature, and then you confronted with the question of how do I translate all this knowledge
to Belgium?
To Belgium, yeah, exactly. Yeah. And so it took quite a long time. Like I had to find blogs, like some of the communities that we have now on Reddit and on Facebook as well. The Fire Belgium community, like they didn't exist yet, unfortunately. So it was really like kind of, a smorgasbord of resources that to find out how to, what funds I could invest in, how the taxes work, what broker I should use, what brokers are there available. And so, there was like, it took a long time to do that, to figure that out. And so while I was doing that, I wrote some articles on my personal blog because I wanted to help the new Belgian passive investor to get started. And so, while I was doing that, I was like, this is way too complicated. Like there are way too many obstacles, barriers for someone who doesn't know much about finance, but still wants to solve his problem. Like seems like only the super interested, the super motivated people,
nerds.
Strong, nerds who have a lot of confidence in themselves, like they are able to do it. But at the same time, I thought this is such a powerful tool. Like, I really think our generation and the ones after us, they're facing a very scary financial future. Just when you look at how the pension system is set up in Belgium, it doesn't seem very sustainable considering the big changes in demographics that are happening.
Yeah.
So I thought it was a super important, tool. Like passive investing, it's an important tool to secure our financial future. And so then came the idea of like, okay, let's make it easy for everyone. Let's build a tool that takes away all the complexities, all those decisions, all that knowledge you have to acquire. Like there's no need. Like it should be much easier and shouldn't be limited to just people that are time rich or very interested or very motivated.
Yeah, very cool. And so then you created this product with your colleague Thomas.
Yeah, so Thomas is my friend from school. So from knowing each other since we were like 13, and we after our studies we actually started first company together called Sutori. And he was very much in the same boat as me.
Okay, cool.
And so that's how we we said we'd start. So we first started toying with the idea like 3 years ago now. And at first we were working on it just one day a week, just to, kind of explore the idea, do the first research. Because obviously it takes a lot of effort to build a company in the financial industry, which is, very regulated.
Exactly. Yeah.
It's quite a challenge. But after 2.5 years, we finally were able to launch it.
No, that's cool. And so, for example, if I'm interested, listen to this podcast and I'm thinking, is it, one question, is it only for Belgians? I suppose so. Or fiscal residents in Belgium, at least?
Yes, indeed. So you have to be, indeed, fiscal resident in Belgium. You don't have to be Belgian. We get a lot of expats as well using Curvo now. But so we do think the problem is European. The problem of the pension crisis for millennials. We believe that most governments in Western Europe, at least, they kind of have a similar system, so we all suffer from the same thing. But it was already very complicated to launch it in Belgium. It's there's a lot of practical issues that come into play in terms of taxation, in terms of KYC regulations. For instance, now we use It's Me to identify a customer when they first sign up. It's Me does not exist in they're starting now in Holland, but like in most other countries, it doesn't exist. So, there's a lot of work to be done to be able to launch in another country. Although, we'd love to, like that's our ambition over the next few years. But for now, we're focused on Belgium.
Okay, very good. And so, I was thinking, if I'm a potential customer, I'm interested. Look, I want to invest. It sounds good to have it, to remove all those decisions about which ETF, which app, which broker, etc. So I go to Curvo. So can I consider you as a licensed broker, just like Bolero or a Bug Zero or I don't know, like a bank? Or how do I need to consider you?
Yes, so we work together with a Dutch partner called NNEK.
Yeah.
And so they handle the investments part. And we are basically the customer facing app. So we do the communication to the customer. We develop the app that integrates all the technical infrastructure of our partner, NNEK. But in the end, NNEK has, they've been around since 1986. They're a big player in Belgium, in the Netherlands. They have all the licenses there, and they also manage the custodian. And so basically, your assets are safe with them.
Yeah, that's good. And then, for example, I want to put 200, 300 euros every month aside to invest in ETFs. So how does that work? Do I need to choose an ETF? Do I need to choose am I helped? I mean, do I get support, or am I still on my own to look for the right ETF that I think is interesting for me?
Yes. So the way it works, the basic premise is that we really want to remove all decision points from the process. So you download the app. So the app is available on the App Store, on the Play Store, on Android. And the first step is to sign up with It's Me. So from that point on, we have all your legal information. Then we ask you a series of questions where we try to determine what type of investor you are. So also, like, what are your goals for investing? How long do you want to invest for? What's your tolerance for risk? Sorry. What's your capacity for taking risk, and so on. So we ask you a bunch of questions. Based on that, we assign you with the best portfolio that matches you. So we have 5 model portfolios, each with a different stock to bond ratio that corresponds to a different risk profile.
Yeah, like
goals.
dynamic, aggressive, or conservative, this kind of profiles.
Exactly.
Yeah.
Exactly. And then, and then you can get started. So as soon as you have to wait like 1 or 2 days until your account is approved, because there are very strong regulations around anti-money laundering and so on. So our partners at NEK do a series of checks around that.
Sure.
And then you can start saving. So you can either do a one-off transfer. So you just do a bank transfer to your Curvo account. The moment that the money is received, it's invested according to your portfolio. The portfolio is also rebalanced. And another thing that we worked on really hard to offer is direct debits. So we believe, we really want to encourage good saving habits. And we believe the best saving habit is when it just happens automatically. You don't have to think about it. So we offer a system of direct debit, so you can just choose the amount you want. And then every first of the month, that amount is debited from your account and automatically invested for your portfolio. Of course, you can edit the amounts whenever you want. You can revoke it whenever you want. It's super flexible.
Okay, very good. And then the question everybody wants to know, how much does it cost?
Of course. No, so it's a 1% all-in fee on your total investments per year.
Okay, so if I invest $10,000, 10,000 euros a year, it's 100 euros or?
Yes.
Yeah.
Yes,
okay.
Exactly. Yes.
Yeah, Yoran, I think that seems quite interesting. And so you just launched the platform, the app in October. So how is the feedback so far? I mean, of course, it's not long-term investors yet, but how is the feedback so far? And what are the plans for the developments for the future?
Yeah, so far it's been very good, actually. We really felt like we've hit a nerve with some people.
Okay, good.
We felt like, people were like, they really felt there was something they wanted to do, but they were just lost on what to do.
Yeah.
They just didn't know. And so I think for them, Curvo has been really good. We're quite lucky to get picked up by the Le Soir. So we had an article in Le Soir in the newspaper. And also we last week we're on On n'est pas des pigeons. It's on the TV show. And so, so far we've grown to 200 customers.
Yeah, good.
The goal now is really to get as much feedback as possible. So my colleagues, they're calling every single customer that signs up. People are quite surprised when we call them because people don't expect that.
Yes, sure.
But overall, people are very happy. And for us, it's really the best way just to get feedback. Like any kind of confusion, we unearth it during that call. Anything that went well, and so now we're really in the phase of, really improving the sign-up process, because it is quite long, it's quite complicated.
Yeah.
So we want to, have it top notch. And the next thing we're kind of gonna work on is more like goal setting. We want to help customers determine how much they can safely save, every month, because that's number one question we see now is like, okay, like you offer this direct debit, for instance, but how do I know how much I can save? And I think, providing the tools, providing kind of the basic thinking on how to determine that is, one of the things we're going to work on over the next few months.
Okay, well, that sounds exciting. And then, Yoran, maybe to close a bit, one question I have is, of course, Curvo seems interesting, and I think it can help people who have decided to invest. But then my question is more, even before choosing for Curvo or another option, what would you recommend to people in general before they start investing? I mean, what would you say are the first step to manage their money better?
Yes. So one thing that's helped me a lot is basically do a quick like income expenses balance. Take like a year and then look at how much is your income every month on average. Then how much are you spending every month? Try to be as conservative and as complete as possible. So of course, like you have your rent, your food, etc. But now it's Christmas time, and so most people spend a lot on gifts for people, and like so all those little things kind of add up. So try to be very complete. And then when you just make the simple subtraction, then what is your saving capacity? How much can you safely save every month without really cutting in your own fingers? And from then on, it's important to build a buffer, to build like some money on the savings accounts that you can tap into. If you run into any problems, you have like your car breaks down, you have a large expense. And I think just making the simple calculation is something that not many people do, and I think a lot more people should do it, just because it gives you a lot more visibility. It forces you to think, okay, like how much am I really spending every month, and like what is, it gives you the visibility, and it gives you more confidence that when you're saving, like you're saving the right amount. Or I think that's what advice I would give.
No, very good advice, and it's something that people can start immediately, or at least in the coming days, if they are not doing it yet. So it's very actionable, so I like it. So Yoran, we have come at the end of the show, and I want to thank you again for sharing your stories and your insights, your tips, and as well the comparison with the retirement savings account in Belgium. I think that's quite helpful as well. Even for me, I am Belgian, but I don't live in Belgium right now. I live in Luxembourg. But still, it's interesting as well for me to exchange with any listeners or even family. So that's quite good. And then before I let you go, Yoran, we always have, as you know, our 3 quick fire questions. So are you ready for it?
Yes.
Okay, very good. So the number one question is always, what has been your best investment so far?
I would say Bitcoin.
Yeah. Okay, very good, very good. Can you share numbers on the return you have gotten on your first Bitcoins, or?
Yeah, so it gave me a 100x.
Oh, wow.
Yeah.
I always say to friends or whoever, oh yeah, if I had Bitcoin in 2013 or 14, yes, of course I would have made a lot of money, but I don't know if I would have had the right psychology to hold or to hodl for so long, because maybe I would have said, I don't know the value of Bitcoin then by heart, but let's say it was $100, and let's say it goes to $500, maybe I would have sold it and and bought something nice with it. I don't know. Huh?
Yeah, and that's what happened to me. Like over I sold like way too early. When the first big crash, when it went up to $250 and then crashed to 50. Most people don't remember that, but unfortunately remember it very clearly. But I mean, it is kind of a trick question, because I think that's, I think there's a difference between investment and speculation.
Yeah.
And Bitcoin was definitely, speculation. So.
Yes, and indeed. And then the number 2 question is there a book that you can recommend to anyone? It does not need to be a financial book, but a book that you say, look, guys, read this.
Yeah, I read a book last summer, which is called, it's written by a Dutch author. It's called In Europa. So in Europe, it's also been translated into English. And I found it fascinating. So the author is a historian. And so basically for the turn of the century, it was written in early 2000. He basically traveled throughout Europe, and throughout the 20th century, he went to the places that were, most important for that time. And so it's really like a beautifully told history of 20th century Europe. And I learned so much that I didn't know before. And like, it's really big. I think it's like 800, 900 pages, if I remember correctly. But I read it so fast because he just writes so well. And I thought it was really fascinating. And so as a European, I strongly believe in the European project. And so I'm definitely a European in that sense. So I just thought it was, definitely one of the best books I've read in the last few years.
Okay, that sounds good as well, to evade yourself as well and to understand more about the history. I think that sounds cool. And then the last question is, we talked about investing, but not about buying stuff. So is there a purchase you can recommend for below 100 euros?
This is my personal recommendation. So I was going to say cocktail glassware.
Okay.
It's kind of out of the blue, but I really enjoy making cocktails. And I think when you put a drink, even if the drink itself is not so nice, like you put it in a nice glass, it just instantly tastes way better. And it made me realize, like, me and my girlfriend, we bought some nice glassware lately, and it's really not expensive. And it's so underrated, I feel like. I think most people don't underinvest in nice glassware, and it doesn't cost much money, and it just makes everything look so much nicer.
So you buy a nice glass, isn't that marketing? I mean, you buy a nice glass and it tastes better. I mean, it's the same stuff.
Yeah, but it's like, when you go to
it's the experience.
Restaurant, the presentation is so much nicer, and it definitely affects your senses, like the way something looks. I'm sure it does, from psychological point of view.
Yes, it does. I mean, just imagine drinking a nice Bordeaux wine in a plastic cup. I mean, you will not enjoy it, huh?
Exactly.
Yeah. No, very good, Yoran. So we've talked about the Curvo app, but where can the listeners find you? Is that Curvo.eu or on the Apple Store? And then I guess you have some social medias where people can find you as well and reach out.
Yeah, so our main website, Curvo.eu, Curvo.eu. We are on the App Store and the Play Store, but the links are also from the website. Personally, I'm a lot on Twitter, so my handle is just my name, Yoran Bronsema. And if you have any questions about Curvo or anything about investing, whatever, you can always email me, Yoran@Curvo.eu.
And you don't have to be Belgian to email Yoran, huh?
You don't have to be Belgian. No. I'll still reply if you're not Belgian.
Yeah. Okay. Very good. Okay. Well, Yoran, it was a pleasure. Thank you so much for coming and showing you. And sharing your story.
Thank you. Thanks for the opportunity.
I hope that you enjoyed this episode and that you learned something from it. And if you found it useful, please make sure you share it with a friend. Or you can also rate the show in your favorite podcast app. This will help the show to grow. So if you do so, thank you very much. And now let's go through the key takeaways for today. Number 1, why should you start investing? Well, the interest on your bank account is close to zero, especially in Europe, and the inflation is eating away at all your savings, especially now. Investing is also a way to take your finances into your own hands and to prepare for retirement. It's even more important for entrepreneurs who do not benefit from the same advantages as salaried employees. Number 2, ETFs and index funds. So ETFs and index funds, they're pretty much the same. The legal wrapping differs, as Yoran explained, and the main difference is that you buy an ETF on the stock exchange, like any other stocks throughout the day, and for the index funds, you go directly to the fund provider. Investing in ETFs means a relatively low barrier to entry, low fees, and a long track record of proven results. You're essentially buying the whole market, so you're instantly diversified, you're betting on the continued growth of the whole economy. In short, you're betting on us to continue to innovate and create value as a society. Here are a few pro tips. So look at ETFs offered by European fund providers. Vanguard or iShares have, for example, branches here in Europe, so you can contact them. You can look at the two first letters of the ISIN code. This will help you identify the country where the fund originates from. For example, we have LU for Luxembourg or IE for Ireland, for instance. And actually, you should look for those two countries to avoid a withholding tax on dividends. And an additional tip, if you live in Belgium, look for an accumulative fund, because then the dividends are reinvested and you will avoid Belgian taxation. There are, of course, other ways of investing than ETFs and index funds. Crypto, real estate, index funds, you name it. They all have their pros and cons, but Yoran was looking for simplicity and flexibility, and then ETFs or index funds are the best option. Number 3, Belgian life insurance products. So yes, as Yoran's calculation showed, well, forget about branch 21, the returns are not worth it. Putting your money in a branch 23 life insurance may offer a better return, but in the long run, the 15-year example, ETFs will remain a more attractive investment. Number 4, Curvo. So yeah, the goal of this platform is to help Belgians to start investing, because it can be complicated for a non-super motivated individual. We're not talking about the nerds like me who are doing the research anyway and reading books and whatever. Okay, joke aside, passive investing is really an important tool to secure a solid financial future. So yeah, the idea behind Curvo is really to make a simple tool that helps automating your savings. And no, I'm not sponsored or anything by Curvo, but I'm really excited about anything that can help and make it easy for people to invest better or to get started when investing at all. And then last but not least, the first steps to manage your money better. You can do a quick income expense balance for the last year. You can see what is your income this month, what are your expenses, make it complete and be conservative. And then you make the simple subtraction, and then you can determine what you can save. This is very simple, and it will create visibility in your finances. And then from the savings you see at the end of the month, this will help you build a buffer or an emergency fund, as we say. And once you have a couple of months saved, well, then you can start investing. And why not with Curvo if you live in Belgium? So that was it for today. Thank you so much for listening. It really means a lot to me. Make sure you subscribe in Apple Podcast. And of course, please do not hesitate to contact me if you have any questions or feedback. Send me an email, john@johnnytalks.com, or connect through social media at Johnny Talks on Facebook, Twitter, and Instagram. And amigos, once more, thanks so much for listening, and I'll speak to you next time.